Good evening. You're tuned into Bizworld with me, Sabrina Zainal. Malaysia's food inflation is set to stay on an upward path in the coming months amid elevated global commodity prices as well as domestic supply chain disruptions and depreciation of the ringgit. Now, MIDF research said Malaysia, as a net food importing country, is highly exposed to global shocks in the food supply chain. Global food inflation remained elevated, particularly the prices of corn, grain and vegetables. Nevertheless, the deceleration of fuel inflation will outweigh the rise in food inflation, assuming that the government maintains the current capped fuel prices of RON 95 petrol and diesel. Malaysia's headline inflation is forecasted to stay below 3%, even if food inflation averaged at 5%, while fuel prices are capped at current levels. Sime Darby Plantation Berhad offers defensive qualities such as land-rich balance sheet for beneficiary of food inflation, as edible oils and fats prices have risen substantially compared to a year ago. Kenanga Research expects the supply of the world's leading vegetable oils, palm and soybean, to pick up seasonally in the second half of this year. This in turn should exert some downward pressures on prices. However, the firm said palm oil prices were likely to stay relatively firm on the back of several supportive factors. These included the tight worldwide edible oils and fats market and the low inventories of sizable palm oil users. Kenanga Research has maintained SD Plantation's average crude palm oil price at 4,000 ringgit per ton for the financial year ending December 31st, 2022. SME Bank is revising its base lending financing rate, BFR, upwards by 25 basis points to 6.45%, effective this upcoming June 1st. This is following the revision of the overnight policy rate by Bank Negara Malaysia recently. The last time the bank revised its BFR was on July 17th, 2020, at 6.20%. With the upward revision, the financing tenure of the customers remains unchanged, while the installment amount shall be revised accordingly. Small and medium enterprises remain strong as the country recorded significant growth in working capital financing disbursements at 21.2% in the first quarter of this year. In the meantime, DSR Taiko Berhad seeks to list by way of introduction on Bursa Malaysia's LEAP market for the durian planter's entire issued share capital of 312.94 million shares at 30 sen each. This is to enhance the company's corporate profile and enable DSR Taiko to tap into the equity market for future fundraising. Based on its listing reference price of 30 sen per share, market capitalization will be at 93.88 million ringgit upon proposed listing. DSR Taiko and its information memorandum, which was filed with Bursa today, said it is scheduled to list on June 27, 2022, subject to the receipt of Bursa's approval for the proposed listing. Malaysia Aviation Group's low-cost arm, FireFly, is set to resume its service from Sultan Abdul Aziz Shah Airport in Subang to Singapore's Seletar Airport. FireFly sees this as a perfect time to reinstate and play the role of connecting the communities within both countries, as the Ministry of Tourism and Culture targets attracting 2 million international tourists to Malaysia this year. The service is effective from June 13th after more than 2 years of suspension due to the pandemic following border closure. The twice-daily return flights were set to be operated by ATR 72-500 turboprop aircraft with a capacity of 72 seats.
It is a journey of enhancement, efficiency, productivity.
That's all the time we have for Bizworld. I'm Sabrina Zainal. Thank you for watching and keep tuning in to TV3.